This is the only way that you're not just going to get funded, but actually be able to keep your account, scale it, and just frankly be able to trade consistently long term. Hi, I'm Matt Donlevy and I am the founder of Photon Trading. And we have now helped countless traders do exactly that by helping them not just acquire funding, but actually scale their accounts long term by implementing this exact tweak I'm about to show you. So you want to get funded or, at least become consistently profitable, right? But when you get to the end of the month, what you probably see is, you look back and your strategy probably performed quite well, but your results are down here. And until you close that gap, you're never really going to find consistency or actually get anywhere with your trading. So how do we do that? Well, that's exactly what I'm going to show you here today. And don't worry, I'm not going to just give you some mindset hack and just tell you, you just got to be more patient, bro. You just got to be more disciplined because, look, whilst that's true, I'm going to give you something practical that you can implement today, make the exact change to your strategy, and actually start minimizing that gap long term and start making gains. So back when I continuously had that performance discrepancy in my trading, it's because I was either losing Larry or hindsight Harry. I was always both basically in my trading, because when you're losing Larry, it's when you're thinking, should I buy or should I sell? Or when you're in a trade, should I hold on to the trade? What should I do? Should I get out? And it's only afterwards, once price actions played out, right, that you're then hindsight Harry. And you're thinking, I knew I should have bought there. It was just obvious. Of course I should have sold there. Or of course I should have held the trade. Like, why did I get out, right? And just always look in hindsight, right? Hindsight vision is 20/20, as they say. And you're just constantly oscillating between being indecisiveness, right? Having that indecisiveness before you enter a trade, and then swinging up the other way and having regret when you're looking back in hindsight. But we don't want to be doing that, right? We don't want to be constantly fluctuating between those two poles like a pendulum. We want to be bang at the top. We want to be centered, and we want to have clear objectivity, okay? We want to get rid of swaying between those two emotions, indecisiveness and regret, because down there is where the masses are, right? That's where the losing 90% of traders are. But the masters, what are they doing? Where's the top winning 10%? Well, they are extremely objective. Do you think when you are consistently profitable, you're having all of these ums and ahs and doubts before you enter a trade? Or, always constantly having regret in hindsight after trade? No. You always know that you made the right decision because you followed what you need to do, right? You have that objective clarity. So how do we get there? Because you don't want to be a hindsight trader for the rest of your life, thinking, just next week I'll get it, next week I'll do it, next month, because I've been there, right? Don't keep spinning your wheels. You're never going to get there otherwise, right? So if you want unwavering certainty when you approach the markets every day, well, by unwavering certainty, I do not mean that you're going to certainly win every trade. I just mean that you have unwavering certainty that you made the right decision, right? How do you get that? How can you be 100% certain that you're making the correct decision ahead of time, right? None of this hindsight stuff. Well, there are two types of trading strategies, and the first is the discretionary system. So obviously from the moment of looking at a chart, starting analysis, all the way through to you actually executing and making those trading management decisions, there's a lot of decisions you have to make in between, right? But if you're very discretionary, there's going to be a lot of question marks there where you kind of know what you're doing. You sort of have this style, you do a little bit of here and there, but like sometimes you do it that way, sometimes you use that time frame, sometimes you use this EMA, sometimes you use that type of zone, right? It's too discretionary. And the more discretion you have, the higher the chance you have of making those emotional states, because there's a lot of room for self-doubt and hesitation to creep in, okay? When you have that. So if you can replace as many of those steps with objective criteria, what do you think is going to happen? As that discretion comes down, your chances of making those emotional stakes are going to drastically reduce. So that's why we have the second type of trading strategy, which is a mechanical strategy, okay? And it's literally as simple as, if this happens, you do this, and if that happens, you do that, right? There's no ifs, buts, and maybes. You just follow it. Literally like a flow diagram, almost to the point where you could code it into a computer to do it, right? So you either do it or you don't do it. The system tells you what to do, not your own gut instinct. Because if you think about the market as a game like Pac-Man, hopefully some of you guys know that. But yeah, essentially, markets are the ultimate freedom of expression, right? You can do whatever you want. You can buy, you can sell, you can trade any asset class, you can risk this much, you can risk that much. You could use any strategy you want, right? You get the idea. It's completely down to you. And to get from A to B, you could go a million different ways, right? There's a million different ways to make $1 million in the market. But what we want to do is we want to have very, very clear strategies where instead of being able to go wherever you want and change it up every single time, instead you just take the exact same path, and you can only take that path. And if you get halfway down the path and the next step isn't there, well, then you stop. You cannot proceed because that is not part of your strategy, okay? Because if you compare two traders, one who has that clear-cut, no if buts or maybe strategy, mechanical strategy, versus someone who's quite discretionary, right? They've got a bit of a style, they sort of trade this way, they sort of use that pattern or whatever, but there's a lot of room for adjusting in there and making different decisions. when inevitably those traders eventually take some losses, okay, in this instance, 4 losses, how do they know if those losses are a part of their probability model, or are they bad trades that simply could have been avoided, right? Well, how do you know that? Well, as traders, we know that we are dealing with something called random distribution, okay? And it's just a fancy word for essentially saying we don't know the order and the sequence in which our wins and losses are going to occur, right? Quick example is if you had a 60% win rate, a lot of people kind of think, oh yeah, I'll probably have about 6 wins and I'll probably have about 4 losses, right? And that would be easy to deal with if they happen in that order, but it's markets. Individual trades are random, and unfortunately, sometimes you have 2 or 3 losses in a row, then 1 loss, then 1 win, and that constant unpredictability is what twists so many people's minds. But as we know, over a large number of trades, your edge should come through to your expected value. Now, one little mindset thing I will talk about, I know I said I wouldn't at the start, is consistently profitable traders have 2 layers of beliefs that contradict each other, but you need to have them both. And that is on the micro level, right? So looking at an individual trade, completely uncertain, completely unpredictable. You have no idea if it's going to be a winning or losing trade, right? Because of random distribution. But on the macro level, right, there is actually a relative certainty and predictability over that large series of trades, okay? And profitable traders can hold on to both of those conflicting beliefs, that it's random in the short term, but essentially predictable and somewhat consistent in the long term, okay? And that's why you do not need to know what's going to happen next to be consistently profitable, okay? Happy days, fine. So that means I take a loss, that's okay. But if you have that discretionary style and you take 4 losses, again, how do you know, oh yeah, that is part of my edge, it's just the cost of doing business, it's fine, I keep executing. Or if you're like, well, actually, that wasn't really a trade I should have taken, I'm going to, that's when the doubt, hesitation comes in, and then you're not so sure. Okay, so you need to eliminate the variable that is you, and the only way to do that is to be able to have those exact decisions that you can look back and manage. Did you do everything? Did you tick all every box in your plan? And did you do it the right way? Okay, quickly to put some numbers on it, you got those 2 traders, mechanical and discretionary, both take those 4 losses, quick maths, both down -4%, right? I don't know what I was doing there, but yeah, down 4%. So mechanical guy, he doesn't worry, right? Because he looks back, knows that he made all the right decisions, doesn't have that fear and hesitation. So what does he do? He just executes because it's the right thing. He knows he made the right decisions, he's consistently profitable, and he can make consistent actions. But the discretionary person, they're doubting, they're hesitating, they're sweating, they don't know if they made the right decision, so they hesitate out of fear. They don't want to take a 5th loss, they don't take the trade. And then what they see their strategy should have played out, they should have been in it. So they go, okay, they get a little bit of confidence, they take the next trade, and now they get a +2% trade. But when you get to the end of that sequence, whether it's a week or a month or whatever, just by missing that one trade, right? The mechanical person's on +3, the discretionary person's on -2. And it's that difference that makes all the difference, because over the long run, the mechanical person is going to keep consistently executing and getting consistent results. And the person that has that hesitation only takes one bit of hesitation to just keep you in that cycle and make you in the break-even dance, okay? Because hesitation kills traders. Now, no one likes losing trades, but imagine a world in which you did enjoy your losses. Well, how can it happen? Well, when you realize that you've made the right decision and you understand random distribution, then you know that every time you take a loss, it's just one step closer to your next profitable run of trades, right? It's as simple as that. But before I had that mechanical framework behind me, right? For years, what would happen is I would take a loss, then I would kind of doubt and hesitate. I would find every excuse under the sun to realize that it probably wasn't a trade I should have taken. So then when you doubt and hesitate and you're fearful, you skip the next trade. And then it always ends up being the winning trade that you skip, right? So then naturally you get FOMO, you revenge trade, you rush into a trade that you shouldn't have taken, you take another loss, and then you're just stuck in that loop, spinning your wheels. And people do this for years, and some, unfortunately, they never break out of it and they just give up, which is a shame, because you can change this. Implement a mechanical framework, because if you don't have that proven defined edge, that's the root cause of nearly all of your problems, probably if you're watching this. Now, what do I mean by a proven defined edge? Well, would you play poker if you couldn't see your cards? Would you put all those chips in and bet your own money, your hard-earned money, if you had no idea what your hand was? Well, traders are betting on hands when they don't even know what cards they're holding, right? You're literally taking trades and setups where you have no idea what your edge is. What are the numbers behind your trades? What is your strike rate? What's your expected profit expectancy? You have no idea. So of course, if you don't know what you're going to be betting on, your emotions are going to be through the roof, and you're going to be so inconsistent with your decision making. So discretionary trading is so tough in your psychology. Like when you're doing this at scale and you're trying to trade big money, do you really want to be betting when you don't know your proven defined edge, right? It's very easy to second guess those decisions. And then it's extremely hard to go and accurately backtest and journal your strategy because it's too loose, right? You can cheat yourself in your back test. You can say, oh, I kind of would have taken that. Oh no, I wouldn't have taken that. But then subconsciously, you know deep down that then when you go to the live market, you don't really have the faith in what you're doing because you don't have the data behind it that you trust. Okay? Now, the path to success to trading is simple. It's not easy, but it is simple. And what that requires is you get that mechanical strategy, you have a mechanical framework that you can repeatedly and consistently execute. Because when you have that, and you have those things that you can then go improve your edge with hardcore data, because you will actually trust it, because you know that they are trades that you will have definitely taken and not kind of loose ones that you can kid yourself that you wouldn't. And when you have that data that you trust, that is when you have that bulletproof mindset, okay? We don't have to do all this esoteric, crazy mindset stuff. You just need data that you trust behind it. It will make a monumental difference to your psychology and your confidence when you're trading. And when you have that confidence, what are you gonna have? You're gonna have consistent actions. And when you have consistent actions, that eventually leads to consistent results in the market. You now finally have cracked the code because now you have something that you can sustain, right? You can do this at scale. You can do this with big capital because of that work that you've done before, right? Because it makes logical sense. And then rocket emoji, right? Off to the moon and all that fun jazz. Now, in all seriousness, if you were given $1 million account today, right? And it was the only money you're ever going to be given, this is your one chance. Are you truly ready to trade it? What I mean by that is, would you confidently risk 1% on that account, okay? So would you risk 10 grand right now on the next trade with your current strategy, with your current understanding, with your current levels of confidence? Probably a lot of you wouldn't, right? And the hard, cold reality is you will never be able to scale. And I mean big numbers. If you really want to do this as a career, you've got to be thinking big, okay? And you've got to try and imagine trading those numbers. Are you going to be able to do that with extreme confidence and clarity that's required to be able to execute at that level, right? With that pressure, even just going for your funding challenges or whatever it is, and you've got family, friends down your back, whatever, just wherever that pressure is coming from even now, before you're at that stage, right? You need that clarity in your proven edge, okay? Because we want to go from having that discretionary loose style to having as mechanical as a framework as we can have, to stop swaying between that indecisiveness and regret, hesitating before a trade and regretting after, and then FOMO, getting in that death loop, where we can be centered and we're objective and we know exactly what we need to do every single time, regardless of the outcome. Okay, we have that path. We're not kind of just making it up a little bit as we go along each day, sometimes doing this, sometimes doing that. No, we do the same thing every single time. And that's how you break out of that break-even dance, or even worse, losing. And we get that all nice compounding curve that we are all chasing, okay? Now, all trading strategies fit somewhere along the scale where you have completely discretionary all the way through to 100% mechanical, where you can literally code it, okay? Now, I personally believe that the sweet spot, if you are a manual human trader, is around 70 to 90% mechanical, okay? I believe that having that little bit of room for discretion actually gives us a bit of an edge over algorithms, right? Having our human intuition, when you're experienced and when you've earned the right to do so, can actually help you just to know sometimes when to kind of stay out or to put your foot on the gas, right, and get a little bit more aggressive, and that comes with time. So I believe having a little bit of room in there is actually a good thing. So look, if you want consistent results, you just got to be consistent in what you can control, right? I don't think, probably if you're watching this, any of us are right yet at the biggest size to be able to influence the market and move the market. That would be nice one day. That would be the goal. But right now, we can't do that. So we just have to be consistent in what we can control, which is our execution, our decisions, and all that stuff, right? So we just need to be a slave to our strategy. If our system tells us what to do, we do it, okay? So you don't need to try and predict the markets and know exactly what's going to happen next, which so many people try to do. You just need to try to be in the markets every time a high probability trade set up by your plan is provided that you execute, you make the right decision, you move on, okay? So the golden question, how can you make your strategy mechanical? Well, I'm going to show you exactly how to do that, and I'm going to show you my exact mechanical plan in the next video here and show you actually how to break through into consistency. So I'll see you over there.